Hello traders, welcome to the fourth module of the Advanced Technical Analysis course, Chart Analysis. In this lesson we're going to teach you all about directionality and how to use multiple time frames to analyze price action, and by doing this you will get better entries and better risk to reward ratio setups. So let's get started. What is multiple time frame analysis? The main idea here is to monitor price action on different time frames on your charts. By doing this, you will know the overall direction of price on the higher time frames. It's important to understand and know the overall direction so you can trade according to it. This will increase the probability of your setups and it will minimize the risk of your positions. And of course, choosing the right time frames to analyze price action on depends on your trading style. For example, if you're a scalper, you are trading off the 1 minute to the 5 minute charts and you are holding your positions for minutes at the most. And scalpers analyze price action on the 50-minute chart to see the immediate direction in price. But if you're a day trader, you hold your position until the end of the session, and maybe you hold your positions for a couple of days, and you are trading off the 1 hour chart. And the 4 hour chart is the time frame day traders use to set their levels, but they trade off the 1 hour chart to get better entries. This means that by analyzing price action on the 4 hour chart, but trading off the 1 hour chart, you will get better risk to reward ratio setups, and you will minimize the risk of your positions and get better entries. But if you swing trade, you hold your positions for weeks and you focus on the overall strength of an asset. And the chart analysis is made on the daily or even weekly charts. So it depends on your trading style. If you are scalping the markets, for example, you don't care about the overall direction on the weekly charts because you are profiting from small movements in price. And on the opposite side, if you are swing trading, you don't care about the small movements in price because you are holding your positions for weeks and you focus on the overall strength of an asset. Day traders trade off the 1 hour chart, but they analyze price action on the 4 hour chart because they set their levels on the daily to 4 hour charts. But by trading off the 1 hour charts, they get better entries because they don't have to wait for a 4 hour candle to close to get their entries. And what we're going to do here is we're going to go directly into the charts, and I'm going to open the MT4 platform so I can show you in real-time charts what we are talking about here. Okay, so here's the Aussie US dollar monthly chart, and we're going to start with a day trading focus on or a day trading style. And when you are day trading, you actually you can look at the monthly chart, but it's of not importance. So if we go to the daily chart, we can see that we are actually in an uptrend. And the first thing you're going to do is you're going to set your levels on the daily chart. Okay, so we have one level here, and we have another level here. So these are the overall levels that you need to focus on, and then we're going to go back, or we're going to go lower to the forward chart. And when you go to the forward chart, you can see that actually we are trading inside those levels that we set on the daily chart. Okay, And if you're day trading, you are not going to be um, you're not going to be getting your entries of the 4-hour chart. You're going to be getting your entries of the 1-hour chart. And this is because if you are day trading and you wait for a 4-hour candle to close, you might get a worse risk to reward ratio than if you are trading off the 1-hour chart. But if we already have our levels of the daily charts, and what we're going to do here is we're going to set levels on the 4-hour chart, and we have a level here. Okay, this is the previous high of the 4-hour chart. Now we have the previous high of the 4-hour chart, and as you can see here, it got broken and then it got tested right here before price moved about 100 pips to the upside. Okay, this was a great opportunity for us to go long on the Aussie US dollar, but as we said before, we are looking to get entries on the 1-hour chart. So if we go back to the 1-hour chart, you can see that price actually tests this area, and if you set your entries right at the 93.32 level, for example, and you set your stop losses 20 pips below, you will get actually a 1 to 5 risk to reward ratio on this trade. And this is what we're talking about, multiple time frame analysis. And this is an example of a day trader. Now let's take an example of a scalper. A scalper really doesn't analyze price action on the 4-hour chart or even the 1-hour chart. Okay, they go to the 50-minute chart because scalpers, they only profit from momentum and small movements to the upside or to the downside. And this is the 50-minute chart. Okay, and if you are a scalper, you are going to set your levels on the 50-minute chart. And for example, here we have a support area. Okay, a previous support area that got broken, so we are waiting for price to test this area as now resistance. So by drawing your levels on higher time frames, you will understand the overall direction in price, and you will know where to look for entries. And in this case, on the 50-minute chart, we already know that this was previous support, so we are looking for price to test back this level as resistance. And if we go back to the 5-minute chart, you can see that actually we have a blue candle here with a long up wick that signals rejection, and then we have a long red candle that confirms the rejection of this level. So we can go short right here and put our stops above the previous wick. And this will give us a 4 pip stop for a 30 pip profit on this scalp.